benefit from changes in implied volatility. It's not always your enemy. So I made the decision. There was a huge sell-off in implied volatility in natural gas. If we look at the past week here, we got crushed in flat price. This is the price of natural gas. It went from 550 all the way down to 410. At the same time, implied volatility actually came down. Now, usually, if a commodity or a stock or something is price crashing, you would expect the opposite. So this is a special case, though, because it's natural gas. It's at the end of fall, beginning of winter. The market is concerned about having enough natural gas to make it through the winter. Like, there's always this fear premium. We had very warm forecasts come in for this week, for the 2-week out period, and that took a lot of the fear out. And so in this case, it actually squashed implied volatility. So implied volatility went from about 100 to 60 vols, and we bottomed out at about 60. That was yesterday, and I made the decision to get in and then add to a position. And I added to that position right around here. Price was at 424. Okay, we're now at 421. Now, when I launched this broadcast, we were actually at 416. And the option price was the same as where I got in yesterday. Now, the example is going to be a little bit more complicated, but basically a 450 call right now is 0.232. Okay, 0.232. Let's just go over and look at what that means. So the price is 0.232. I entered yesterday at 0.215. Okay, so the price move on the underlying on natural gas itself, 0.23. Yeah, it's still 2.231 now, but let's just call it 4.205. Okay, so the underlying price was minus 0.035. The delta of the option was 0.4 yesterday. So, and then we had 1 day of time decay. So we would expect the price to go down 2.05 cents. So to be trading at 0.1945 or 195, but the actual price is 0.232. Okay, so how does that work? Well, it's basically mispriced, you might think, by 4 cents. How did the price go up when it should have gone down? The answer is that the vols went up. So when I bought that call, the implied vol was at 60. Now you can see the implied vol is 72.7. Okay, and so we had a shift of 11.5 vols, and that times, where's the gamma? Where's the vega? Oh, that was the vega, sorry. So that times the vega is 0.048. So that's where the additional value of that option came into play. Is I actually made 4.8 cents just on the move in the implied vol. So even though the price went down, the value of the option went up. Okay, now what is that? What are the implications of that from a trading perspective? Basically, what that implies is that people are interested in buying protection at this point. And it's we're still at the beginning of winter. So the risk of winter has not completely passed. So it's most likely calls. So what that's saying is, huge move down over the week. And now there's this interest in calls coming in, probably because some of the weather models are showing the potential for cold on the end of the forecast. And so people are starting to protect themselves for the weekend. Does that mean anything for expected flow later today? Possibly, possibly not. As I said, when you see such lopsided action, and this was something I said yesterday, in terms of day session volumes just being consistently negative, it's time for a reversal. And it looks like we're going to get that reversal, and I would expect balance of probabilities that we'll also see follow through on Monday. So there's never certainty in trading. For all we know, this trend could reverse on a warm forecast that comes in this afternoon, and we could close at the weekly lows, right? That's possible. But on the balance of probabilities, I'd say at this point, there looks like a 65% chance that we're going to be closing up from our current levels. We're currently at 4.26206, so 4.21. And I would say, I'd say there's a 65% chance we're closing above, a 50% chance. Yeah. I give it 50, because there's a good chance we close kind of right where we're at. We got this 50-hour moving average that we have to get through. So we could close right around the 4.2 level, but I think there's a good 50% chance that we take a leg higher here before the end of the day and set up, a very bullish chart pattern for over the weekend into Monday. So, all right, well, that's the update. The main thing I wanted to show is just the effects of implied volatility moving your way and how Vanna can work in your favor. All right, thank you.